What is going on, Alpha Hunters? It is a very wonderful Hump Day Whipsaw Monday or Wednesday. Sorry, Wednesday. Um, yeah, it feels like Monday because we really haven't had much going on in the market in a while. But today we got some stuff to talk about. So it kind of feels like the first trading day of the week, just because of been on a long weekend. I guess the market's just been kind of sleepy, but not today. Let's talk about it. Nice gap down on the market this morning. A lot of dip buyers right there at the end of the day yesterday. Not shocked, at that, just because it's been the mantra for so long. But we gapped down on the market today pretty good. It's about 1.1% of a gap down there on the SPY. Take a look at the pre-market just real quick. Yeah, there's the drop. Guess where CPI came out? Right there. So yeah, first, even people tried to be bullish before we got there, right? You see that little pop there, green 5 minutes before, or for the 5 minutes trading before, and then we just immediately just got thrashed for about 15 minutes. And you can see that we haven't even broke pre-session lows, or pre-market lows. Just kind of mostly been sideways. It's kind of been an interesting day. We do have a little bit of volatility here over the past hour of the trading day because we have a 10-year treasury auction that took place about an hour ago. So that's kind of created some volatility. You see pretty good swings there, but nice little run up this morning off that gap down. Then we pulled back down on session lows, and I mean that's kind of where things sit for now. Yeah, I mean that's just how it is. Currently down about 1% on the SPY. Qs, and we're getting Fed minutes right now as we speak. So yeah, we got Fed minutes out. We got Treasury auction happened about an hour ago, and we got CPI pre-market about an hour before the market open. So yeah, we got a lot of stuff kind of going on today. Qs though down about 1%. Really kind of a flat day here on the Qs. Not too much. Some pretty good volatility, I guess, especially over the past hour. But yeah, other than that, pretty good gap down there on the Qs as well. IWM down 2.7%. We'll check this out on the day. I'm sure this is going to look pretty gnarly, but yeah, I mean, nice little run up there in the first hour, and then just slowly pulled down here over the past 3 hours or so, 4 hours, 3.5 hours. So that's just kind of how it looks there on the IWM. Not exactly a great day. Huge gap down there on the IWM. The Dow Jones DIA gap down, kind of a sideways day, kind of choppy over the past hour. Okay. RSP kind of looks like the IWM. Pretty good gap down. Nice little run there. Maybe the second 30 minutes of the day. And then, yeah, just kind of been pulling down pretty much ever since. Maybe we have a little double bottom here in the past hour. And maybe we'll see it go higher. That'd be interesting. RSP is currently down 1 2/3%. Kind of mentioned this one last week. Watch out for this potential head and shoulders, as I definitely thought that this sell down day that we got last Thursday was a big deal. To me, that was kind of definitely a changer there on the RSP. We definitely did go push a little bit higher than what I thought we would, but there's a reason why you put stop losses up above that head. But we retested kind of high. I kind of even talking yesterday, I would still be selling this stuff. RSP though, big breakdown today. So not much really to say there on the RSP. Probably just maybe looking to tactically take some bearish positions, I guess, but we're going to have the 50 EMA and this low point that we had back in mid-March, about the same area, so just be mindful of that. Other than that, is that coming? That is breaking back down below. So it is breaking back down below that previous all-time high back from the beginning of 2022. So that would be interesting, because I'll take a look at that monthly again, actually. So looking at the monthly, you can see we broke above it last month. We closed above it. So I'm going to be really interested to see how we close the month of April. If we come back down and have a bearish engulfing on the monthly after taking the previous all-time high, obviously that would be a false breakout. I mean, however you want to look at that, but it wouldn't look too great. DIA starting to break down, getting down to some lows that we haven't seen since February. Not a big deal, but okay. Let's take a look. We broke the 50 EMA. We are now kind of in between that 50 EMA, that 100 SMA. Okay. All right. Fair enough. That's all we got. Another thing I'll mention this when I get to the SPY, but IWM. Yeah, IWM has a pretty big gap down today. We were kind of talking about it yesterday. The bullishness here on the IWM, even though I do like the IWM, I'd like it more in the Qs. Not to say it's going to be prone to getting absolutely face ripped like it is today, mostly because a lot of people have that perception that these stocks do really bad in high interest rate environments. I actually have a little bit different take on that. I actually think a lot of these stocks could be really great values just because they don't have the debt associated that a lot of these big mega caps, like especially the big tech stocks that have grown a lot over the past 15 years from the usage of debt, and they have a lot of debt on the balance sheet. A lot of these companies, they didn't really have access to debt markets because the debt markets were already really expensive to them anyways. So that's my take on it. It's it can go both ways, I guess. But I would rather see and understand some of the Russell 2000. There's a lot of stocks out there in the Russell 2000. If you can find those stocks that can grow the company organically, and they're having like high, they're growing revenue, they're growing, obviously, if they can grow earnings, but it's not really so much earnings, but it's operating income. If they can be growing those two and they're not growing and using debt, that is called organic growth. And that is a big deal. That is what you want to find if you want to find the next big time stocks. Okay. A lot of those big tech stocks that have been using the debt market over the past 15 years, they're about to find out they're not going to be able to use that anymore. And they're going to have to pay off their debt. So I do like the IWM more. It's going to be prone to days where yields pop like they are today, and it just gets its face ripped off. So it is what it is. Qs. All right. So Qs still not having that breakdown moment. Let me get rid of the 100, 200 there. So still not completely breaking down. We did have a nice little rally there towards the end of the day yesterday, but the thing I'll say, I was about to mention it, but I'll mention it here with the Qs and SPY. We are getting to that period of time where we've already seen yields break out, and we haven't talked about yields quite yet today. They were having a monster day, but we are getting through some of these levels on the Qs and SPY where they are going to be breaking down, and I think we're going to see yields rest. Okay, we already know that yields have kind of been breaking out, making yearly highs here over the past 2 weeks. Qs are really close to breaking down here. I would say they probably are breaking down. And I would expect to probably continue to see the Qs and SPY, especially those bigger stocks, to probably continue to break down. And then the yields maybe rest. Not say the yields kind of come down, but just rest, not continue up as much as they have been. So that's kind of the vibes I'm kind of looking for. And we'll see if that happens. SPY getting below that 20 EMA. Yeah, I mean, we got a pretty good room to fall here down to that 50 EMA. I'd probably expect us to continue to do that as we go into the latter parts of this week. So SPY, there you go. VIX, nice bounce today on the VIX. Anybody shocked by that for how much the market is down? Absolutely not. There you go. Dollar exploding higher. We all know what's going on with CPI this morning. If you don't know what's going on with CPI this morning, let's just run through it real quick. It'll take a very quick second. Year over year, right here, this number right here, year over year inflation rate came in at 3.5%. The market was expecting 3.4%. Prior month was 3.2%. Wow. Prior month came in at 3.2. We just jumped to 3.5%. So that's total. That's headline inflation. Here's core inflation. Core inflation previous month was 3.8%. Forecast was calling for 3.7. We got 3.8%. So it was flat month over month. It was stayed flat, but it didn't drop like people were expecting. So, yeah, that's kind of how inflation is, and obviously you can see the reaction there on the dollar this morning. Here's a 15-minute look. Yep, there you go. Boom, pop right there when we got that inflation data. So, kind of talked about this double bottom potentially yesterday with these two lower wicks down here. If we have any kind of pullback here over the next day or two, you're going to be buying it off of this level, this upper wick that we put in this past Friday, around the 104.65, 104.7 type area. Yeah, so even all the way up to maybe like 105, you could probably say 105, which would be this high. Say, hey, you know what? I'm going to snag a position there. I'll snag a position down here if it kind of falls down to there. And obviously, you probably have a stop loss, I would say, down here. Just because if it continues to come down and breaks this, you don't want to be leveraged at this spot. You'd rather be leveraged at like a spot down here, because if it comes just screaming back down, it'll come hammering down. But I would set like your risk position to a stop loss here, but set your actual stop loss right here. I think that'd be a little bit better protective rationale there. Other than that, yeah, that's dollar. I mean, it looks that looks very strong. Looks very, very strong. Wow. Jeez. All right, gold. With all that being said, dollar DXY up 1%. Gold's only down 0.5%. That's not horrible. Let's check these futures. Futures kind of flat actually day over day. You know, futures kind of just had a little bit of upper wick yesterday, a little bit of a lower wick today, bouncing back. Let's see what it looks like intraday. Yeah, you can see they had that drop off, but they've bounced back pretty good. Damn, gold is looking solid, guys. That's a very strong day on gold. I get it, they're down, gold's down, but that's a strong day for gold. For yields to be up as much as they are, dollar to be up as much as it is, gold hanging tough like that. That's a strong day. Quick look at silver. Yeah, I mean, it's kind of flat day over day. Yeah, that's pretty good. It's a pretty solid day there for silver as well. All right, let's talk about it. Yields, the big one. So let's look at this intraday here. Let's go to a 5-minute. Past hour, we had a treasury auction. We had a little bit of an uptick on yields initially there on the treasury auction. It looked like it settled out. Maybe kind of a base here, double bottom base. Maybe we push higher here. Man, that stinks. I mean, that looks pretty good so far to set up to continue higher. Anyways, you saw that big line on the left side this morning. CPI data just pushed those yields higher. Got up to that 4.5% level this morning initially, and we have continued to push through there. Yields, man. So this is kind of what I mean by, you know, we might get into a period here where we see yields kind of settle down a little bit. I mean, it's a pretty strong day where we see yields maybe just settle down for a couple days. The market, as it's kind of breaking through some support and uptrending type support levels, you know, maybe we do see, you know, the market kind of break down. Yields, maybe we'll see yields kind of continue higher, kind of get into the upper end of this channel, possibly. I mean, it's just a line on the chart. Not to say it goes all the way back up to here in the next few days, but or in the next couple of weeks. But I mean, just trying to find potential lines or scenarios or where we can kind of get to. The other one I kind of like, we've looked at this before, this 4.5% level, which is kind of where we had this kind of neckline before back here in October, November, where we had this, you know, break higher, shoulder, neck, head, neck, kind of a bounce off of that, kind of like a double bottom bounce right there off of that, and then we broke that down. So we're kind of at that level now to where, you know, maybe we do rest here, and maybe we kind of form into this pennant pattern, and then we break higher as we get into maybe May or later in April. That'd be interesting to see if that does take shape. So if we do see yields maybe hold tough here and just kind of sideways churn, I'd be curious to see what happens with the stock market. Is the stock market going to finally see a little bit more of a pullback here? I think it's more of an issue that the stock market's not pulling back and yields are going higher. I think that's more of a detriment. I think that just says there's not going to be as many people buying down low because I think so many people are chasing the rally. So that's the 10-year. Yeah, we know how great they're doing. I really was just kind of interested in how the what? I hit the wrong button. How that treasury auction went this morning. Yeah, I missed hitting the year button, the Y button. 30-year yield bouncing pretty solidly today. Where's it getting up to? So the 30-year yield really, I would say, hasn't gotten to that neckline, that around that 4.7%, but it had a little bit of bounce here where it currently is. So maybe it kind of settles down for today. Maybe it continues a little bit higher over the next couple days. I would expect some follow through on yields, though, on whatever the market movement is today. I would expect a little bit of continuation of whatever it's doing today tomorrow, as a lot of people do digest what happened today and then they make position changes for tomorrow. They see the market reaction, right? You see the market reaction at the end of the day. Oh man, the market was down 1%. Yields are up 4%. Well, I'm gonna make some allocation changes. People do that. Maybe we'll see an afternoon bounce tomorrow, but as far as how things are going today, I don't think we'll have a significant enough bounce to kind of change too much. Look at the bounce on the 2-year, up 4.6%. I get it's a percent of a percent, but man, that is a strong bounce. And we are rapidly approaching the high that we put in back in October. I mean, we're not too far away from it. It's almost like we get another day like today, tomorrow. I mean, we'll be up there. Jeez. Let me see. How much did we move today? So 4.5. So if I move like another 4.5, yeah, I mean, we'll be up in that general neighborhood. We'll be just down the street, basically. So, I mean, we're right. We'll be right there if we get another move like today. Anyways, so that's a quick look at yields. 10 and 2 inversion. Whew. Wouldn't have thought you would see that, but yeah, for how much the 2 years knocking it out of the park today, it's looking pretty solid. HYG, it's trying to break this down, man. It's trying to break this. It is also trying to hold it. We got some market people fighting it out here. Ooh, that is a tough one, man. I would rather see a daily close below this low to make sure, like, we've eaten up all the people that are trying to be bullish at this level. I would like to see a daily close below that. And then you probably take the next retest, maybe even the next morning, the next day, retest maybe into some of these levels and just take that bearish. LQD, yep, obviously we're getting the breakdown there. Kind of talked about the possibility of a double bottom here, but it was a possibility. I was more concerned with these moving averages coming down as we broke down last week. It was last week. Yeah, it was last week. I thought that was more of the concern, but man, it's brutal. TLT kind of making its way back to the lower ends of this channel. Be curious to see if we just come screaming right through the bottom end of this channel and then we bounce later on. I'd be curious to see if that happens, actually. Let me see. I'm sorry, I'm just trying to look back through the history here, see if we've gotten any kind of, like, we had like a little bit of a down channel here, and then we eventually just fell through that downward channel kind of towards the end of it. Be curious to see if something like that happens again. Because the TLT is not out of the bonds here have not been performing all that well, and I was kind of thinking we were going to come down and take out this low, anyways. All right. Well, TLT not looking, definitely not looking good. That is not looking good. So we're gonna have a lot of red out there as far as sector performance goes, but I'd probably be more interested to see what it looks like intraday. So we'll look at that here in just a sec. But real estate, man, real estate's just getting hammered. Real estate does not do well when yields go higher, when interest rates go higher. So yeah, REITs, look at that, down 4.5%. Oof, that is smash burger city, man. Utilities also getting hit pretty good. Not nearly as bad though. Discretionaries, materials, financial, tech, and healthcare all underperforming there. We got communications, industrials kind of in line with the market there. Staples, energies outperforming. Intraday, so this is taking out the gap. So this is where you can kind of really see what things have moved through, throughout the day. Real estate, also they've gotten hammered today. Discretionaries, tech, financials. Oh no, healthcare and financials. Utilities, all underperforming, kind of in line with the market though. We got communications, materials there. Staples, a little bit of outperformance. Energies, industrials. Okay. Take a look at the CME Fed Watch tool. So I think we already knew May was not going to happen. Here's June. So a June change. Oh my goodness! Check out the change. So yesterday, possibility of 43% of a rate hold at our current level. Today is now 83%. Yeah.